Good afternoon and welcome to the THOR Explorations Investor Presentation. Throughout the recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time by the Q&A tab situated in the right corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all the questions submitted today and publish responses where it's appropriate to do so. Before we begin, I'd like to submit the following poll. I'd now like to hand you over to CEO Shagan Lawson. Good afternoon to you, sir.
Good afternoon. I'm pleased to be here to report on our Q2 performance and H1 performance and provide our outlook for the remainder of the year, and also talk about our current operational activities with exploration in Nigeria and the advancing of our THOR project in Senegal. So there's a disclaimer, there will be forward-looking statements in this presentation. So I always give an introduction of who we are and an overview. We're THOR Explorations. We're a West Africa-focused gold producer with an exploration portfolio in Nigeria and in Senegal. Our flagship project is the Segilola Gold Project, which underpins our value and generates our cash flow. Last year was our second calendar year of production, where we produced around about 85,000 ounces. This year, we have a production guidance which has been reduced to 90,000 ounces, and we believe we are on track to deliver that. Our resource in Nigeria is based on our DFS, which had delineated a reserve of 518,000 ounces of gold, grading at 4.2 grams per ton. We also have an advanced exploration project in Senegal, the THOR project, where we have a global resource of about 1.78 million ounces. We have a 70% economic interest there. That resource is divided between almost 50-50 between an indicated and inferred resource. It's in a very prospective location, approximately 5 kilometers from Massawa, and we have just completed a 15,000 meter drilling program there with results pending. And lastly, we have a portfolio of licenses in Nigeria where we believe we are a first mover in the mining sector. We have a portfolio of lithium exploration ground where we are carrying out early stage exploration on a number of prospective sites. We're also growing our land package there at very little cost. We had initial encouraging drilling results, and we're looking to build on that slowly through the course of this year. There's an ongoing drill program which is being used to test various targets we are delineating. So going into our Q2 performance. So in Q2, it was a very strong quarter for us, operationally and financially. We sold 23,588 ounces of gold, which for the quarter was, a record. And we were very pleased to do so at prevailing high gold prices. We achieved an average realized gold price of $2,309 per ounce. We're very pleased how we managed to stay on top of our costs as well, with a cash operating cost of $585 per ounce and an all-in sustaining cost for the quarter of $802 per ounce. I will say that we did push higher grade material through the mill and put some lower grade material onto the stockpile, and hence the lower all-in sustaining cost for the quarter. Our revenues for the quarter was just under $54 million, and we had a net profit, which was another record in the quarter, of $27.5 million, and an EBITDA of just over $37.5 million for the half. In terms of cash and cash equivalents, we had about $7.5 million. We were pleased to pay down another significant tranche of our senior debt facility, with the outstanding amount remaining just over $6 million, which will all be gone by the end of this year. We have 2 tranches left to pay over the next 2 quarters, and leaving us in a net debt position of $2.7 million. So like we see, particularly being supported by these times of very high gold prices, we're rapid hedging, and we continue to strengthen our balance sheet through the course of this year. In terms of just over 4.7 million tons, which was about 491,000 tons of ore mined at a grade of 1.77 grams per ton. We have built up our stockpile. We have over 1 million tons of ore on our stockpile, which can be processed over the course of over 1 year. So we're very encouraged by that. There will be a period according to the mine plan, where the physical mining is significantly reduced and stopped, and all we're doing is processing the stockpile at a very low cost. The grade, in terms of processing, we processed a lower amount this quarter, but at a significantly higher grade. We processed 174,000 tons at a grade of 3.42 grams per ton. We did complete the upgrade of our plant. We had made a number of changes which had kicked off in Q3 and Q4 last year, and this was commissioned during the period. And we were very pleased with how what that resulted in, a recovery rate of 94.6%, which was the highest recovery rate over the last 5 quarters. And so now what we're trying to do is maintain these levels of processing and this level of recovery. We also are in a position in the mine where through the course of the year, we're now entering into a relatively high grade area. We do see ourselves slightly higher than the 3.4 grams per ton being processed from now through to the end of the year. This resulted in a total of 18,000 ounces of gold recovered, and we also poured 3,000 ounces more than was recovered, really because during the course of the upgrade to the plant, there was a buildup of gold in circuit up to about 11,000 ounces. We are looking to pull down on that gold in circuit throughout the course of the year, and hopefully, once we've done that, stabilize at a level between 1,500 and 2,000 ounces of gold in circuit. I have had a few inquiries as to what it's like operating in Nigeria, and I guess we do have a lot of, should I say, new shareholders or potential shareholders looking at the company who don't know anything about Nigeria in the mining sector, really, because I guess we are a pioneer. This is still the only large-scale gold mine in Nigeria. So in that regard, I'll go through this slide again, which we've kept on in our presentation for a while. It's the major economy in Africa. It has a politically stable environment where we haven't had any coups for 40 years. There's been a presidential election about 12 months ago, and we've managed to operate since smoothly without any issues. We've been in the country for 7 years and haven't had any incidents that have disrupted our activities. Yes, it's not known as a mining destination, but it has got an established industrial base, a huge cement industry, obviously a massive oil and gas industry with a lot of transferable skills and a good access to labor. And, finally, the last 2 points on the slide is, there is very strong support from the Ministry of Mines and the government trying to diversify the economy away from oil and gas. Hence, the incentives that are in place for us are extremely enabling. We own our project 100%. We have a favorable royalty rate. We have a 5-year period of corporate tax holiday. And lastly, we do believe we're in an area with immense geological potential, which has been largely underexplored. In that regard, we think the biggest wins and our primary targets for the remainder of the year is to extend this mine life. We have put ourselves in a position where we have no more capex requirements, expenditures, significant capex requirements, expenditures. We will be completely delevered from the end of the year. We are rapidly strengthening our balance sheet and paying down our accounts payable. So any significant increase to the mine life, or should I say, every incremental ounce we find is hugely value accretive to us as a company. And what I would like to talk to on this slide is how our exploration underneath the pit has evolved since having this asset. We have delineated an underground resource of 135,000 ounces, grading at over 5.5 grams per ton. What you see in the top image, in purple, you see our open pit, and then the colors underneath it are the resource colors that we delineated while we were defining the resource through a diamond drilling program where we drilled over 12,000 meters. A couple of key points are that we had never closed out this resource at depth. And secondly, this was our understanding. You could see the high-grade shoots we defined were almost vertical. If you look at the image on the bottom, this is following the completion of structural studies by two independent structural geologists, structural geology consultants that have visited the sites through the course of the year, and also compiling the grade control data we've now built up since completing the resource model over the course of the last 3 years. And what you can see in the bottom image that differs from the top image is how tightly constrained the pink areas are, the pink shoots, which are the high-grade areas grading above 5 grams per ton. They're gently sloping, shallow sloping, high-grade shoots dipping from north to south, as opposed to vertically as we previously assumed. So we're now in a position where we're very encouraged by this. We've kicked off a 12,000 meter program, chasing these shoots to the south with the aim of increasing the underground resource. It's probably worth mentioning at the time of carrying out this resource, gold was trading at $1,600 per ounce. We're now trading at $2,500 per ounce. There's significant scope for the pit to go deeper prior to transitioning into an underground. So we do see some low-hanging fruit here in terms of extending the mine life. The drilling is ongoing now. We aim to release our first set of material results through the course of September and throughout to the end of the year. This 12,000 meters is an initial program to continue to chase this concept. However, should it be successful, we can rapidly upgrade the number of meters, and that's our intention. We've also continued to acquire additional exploration tenure. You can see in blue on this map on the left-hand side is the licenses we currently own 100%. We have drilled to success a number of small deposits and discoveries. We've also, through our reconnaissance and desktop studies of the region, identified an area to the south of Segilola, and we've assembled a land package there. We've started carrying out soil geochemistry surveys on the land package, and we're pleased to say we've delineated 7 kilometers length of anomalous ground down there. We're working these up into drill targets over the Q3, and we hope and aim to start drilling these before the end of this year. One thing we're also going to be positioning ourselves to do by the end of the year is to complete a study on mining these satellite deposits and transporting them to Segilola and stockpiling them there. So we do believe, where we sit at the moment, there is material upside already based on the underground and the satellite deposits in terms of valuation and extending the mine life. That's it on Nigeria Gold. I'll now touch on our Senegal Gold project. Senegal is obviously a much more advanced jurisdiction in terms of gold production, gold exploration, and gold mining. We have a very prospective bit of ground we've always been very excited about, which we've been advancing over the years. This project here is, in terms of ounces, a lot bigger than what we have in Nigeria, albeit it's a lower grade. And we've been drilling this through the course of the last few years, growing the resource. We've carried out a 15,000 meter drill program this year. We had a very nice set of results in the period, and which was press released on June 25th. We will be updating the market with the next set of results very shortly, and the final set of results in early September. The Douta project itself has 1.78 million ounces. What is very attractive about this is this project is on a 7-kilometer strike length, and our average depth is just around about 70 meters. So there's still a lot of scope to go deeper here. This is by no means closed out. In terms of what we're valued at and recognized at, I believe we're recognized as a single project producer, a Nigeria single project producer. I believe this project has scope to deliver significant value to the company and its shareholders over the next few years. We are, our drill results, our first set of drill results show mineralization from surface, stunning intersections. For example, the intersection we've shown here on the slide, 24 meters at 3.5 grams per ton from surface. Wide intersections, 12 meters at 1.4 grams per ton, 9 meters at 2.74, and 8 meters at 1.13. As you can see, these are all very shallow intercepts targeting the oxide. We just subsequent to the period, we completed our 15,000 meter drill program, and we're now in the process of completing the remaining work streams for our preliminary feasibility study, which will require these drill results. The key components that are being finished off are the MET work, which will be inputted into upgrading the resource as well. And then subsequent to upgrading the resource will be the preliminary feasibility study. And that's all happening prior to the end of this year. Lastly, we do have a subsidiary which has assembled a land package for early stage lithium in Nigeria. We have budgeted a small amount of money here, which is aimed at picking up ground, carrying out low cost exploration, and drilling out targets. Our initial reconnaissance identified some prospective areas which had initial success with drilling. We're continuing to carry out that drilling through the course of the year. And this simply provides optionality for us as a company. We're a first mover in Nigeria. We try to see what we can, we have a lot of opportunities that come across us as a first mover. And then we try to see what can add significant value to our shareholders. We believe at a very low cost, we're able to analyze and assemble some very prospective ground here, and we will be hopefully press releasing some drill results again before the end of the year. So far, apart from the drilling we did last year, we haven't had hugely encouraging drill results yet. However, we do have a number of prospective prospects that have been worked up into well constrained drill targets, and those will be drilled. Those are being drilled and will continue to be drilled through the course of this year. I'll close off by talking about the outlook for the year. We changed our guidance to 90,000 ounces. We believe that's achievable, and we think the company will achieve that. We have reduced our all-in sustaining cost. We think that would fall below $1,000 per ounce, $900 to $1,000 per ounce. We will greatly strengthen our balance sheet. We'll be completely delevered from our senior debt position at the end of this year after the final two debt payments. We have drilling programs going on across our entire portfolio. So Segilola near mine, the underground is ongoing at the moment. We've completed the Douta and Douta West drilling programs and are now awaiting the balance of the results. And we have scout drilling on our Nigeria lithium portfolio. We also think material bit of news to look out for, a material milestone for us this year will be the Douta resource upgrade and preliminary feasibility study. We think the Douta project is a project in our portfolio that we can build, and we'll be looking to advance rapidly once we complete the preliminary feasibility study. So that's it from a presentation perspective, and I'm happy to go through the questions. Thank you very much.
Perfect, Segun. Thank you very much for your presentation. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab, which is situated on the top right-hand corner of your screen. But just while the company take a few moments to view the questions that have been submitted today, I'd like to remind you that the recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Segun, as you know, we received a number of pre-submitted questions, and we would also receive questions throughout today's presentation. And at this point, if I could just hand back to you to read out those questions and give responses where it's appropriate to do so, I'll pick up from you at the end.
Okay. So there's in total over 40 questions. I don't think I'll be able to go through all of them, but let me give it a go. Okay, so should I just go straight into the questions?
Yes, if you could just read them out and then give the response, that'd be great.
Okay, first question. Do you think that Segilola Underground can deliver more than the current 135,000 ounces of inferred resources? Yes, I certainly believe so. And my belief is driven from the fact that we haven't ever historically been in a position to throw significant amounts of cash at this. Secondly, we haven't ever closed this resource out at depth. And thirdly, we have a much better understanding of the geology here, the structural controls. Now we've opened up the pit. We're still very encouraged. So yes, I certainly believe we can grow this resource from its current 135,000 ounces. Second question, will the Segilola resource still be updated by year-end, and will it include the known satellite deposits that have already been established? If so, then how many ounces can we expect to see from these satellites? So yes, we would like to update the resource. However, we are constantly drilling, and so the resource is going to be a moving number between now and the end of the year. So I can't commit to that just yet. What we will do is, as we drill, we will press release our drill results, and then we will assess whether or not it's a good time to draw a line in the sand and update the resource. Next question. Can you talk through the repayment schedule of the gold stream facility and how this may be accelerated with gold now above $2,500 per ounce? Yes, the gold stream facility is based on 10% of our gold being sold to our senior lender, the Africa Finance Corporation, at a 70% discount. So all in all, our gold is discounted by 7%. This is a capped gold stream at 2.25 times value. Given the fact that the gold price is higher, does mean the cap comes in earlier. So we certainly expect that to fall away quicker than initially anticipated. Next question. Due to PFS was delayed due to the shipment of samples for MET testing. Where are we with this work? Can you advance permitting and all other work streams to be close to a finance investment decision sometime early in 2020? If the flow sheet requires an autoclave versus other methods, will this have large implications on the overall project capex? I'm encouraged to say that we're very advanced in our DUTA MET test work. We expect that work to be completed next month. The other work streams for the PFS have pretty much been done. All the environmental work, the geotech work, that's all been done. What we're waiting for essentially is the final MET work. In parallel to that, we have been advancing the permitting applications, and as you can imagine, the outstanding request on the permitting front is the MET work as well. So having the PFS complete and the resource updated is of very big importance for us. I can't really say too much on the implications of the overall capex, but we do have a back of the envelope number in our minds, and we don't think it's a number that's insurmountable for us as a company. We believe we can build this without any dilution to our shareholders. We also, what was the last part of the question? Finance investment decision sometime in early 25. Yes, that's certainly the timeline we're working with. We're doing a very detailed preliminary feasibility study. We're looking to fast track from preliminary feasibility to a bankable feasibility study, and then get to a final investment decision in early 2025. Next question. If you're able to increase the life of mine at Segilola and prove up the resource at DUTA, given the current high gold prices, do you think THOR would be a bid target? Honest answer, I don't know, but I certainly think THOR is a very attractive value proposition, strong cash flows, no debt, and a project in DUTA that can probably deliver, gold for the next 12 to 15 years. At a rate of, based on the current resource of around about just over 100,000 ounces per year. There have been substantial investments in long-term inventories. When can we expect the inventory will turn into revenues? Yes, we have over $80 million of inventories. We see this as a very big positive for us. We're putting high grade through the mine. Like I said earlier in the presentation, there will be a period where the mining is greatly reduced and stopped, and we have no diesel costs and no costs of extraction, just processing the stockpile. And that's when our all-in sustaining costs comes right down, and we expect to generate very strong cash flows from the inventories at that time. And that will be, I think, from the back end of 2026 onwards. The inventories we also will be blending with some high grade through the course of later on this year and next year as well. So we will be turning some of that into cash flow as well. When can we buy additional shares? Will there be an opportunity to buy more shares? We don't plan on issuing any more shares. We're listed on the TSXV and the AIM market of the London Stock Exchange. And the shares are available to buy there. And yeah, I would certainly encourage you to purchase shares from there. Next question. When does the company plan to reward the shareholders? I assume this means returning cash to shareholders. We've had that conversation as a company. We don't have a formal policy, but we certainly intend to do so in the first half of next year sometime. This is all in discussion. There isn't a formal policy at the moment yet. yet. However, we will be completely done with our senior debt by then, and hopefully continue to and be building up cash and strengthen our balance sheet. And we are, the board and management is aligned with shareholders and hopes to reward its shareholders by returning cash. Next question. Could you please ensure that you post all updated presentations on your website? Make sure they're titled correctly in advance. Thank you in advance. Okay, thank you. We'll do so. What's the rationale of hedging 2,000 ounces per month at 2,176 with the price of gold well ahead of that price currently? We priced the 2,000 ounces per month in early Q2 at 2,176. At the time was all-time highs for gold. We just wanted to make sure we had enough budgeted to cover all our senior debt through the course of this year, and whilst we turn our accounts payable into current. And so it's about just under a quarter of our production. We know we're guaranteed that level of cash flow, and blending the rest at the current gold prices, we think we can live with. It still delivers record revenues and profits to us as a company. But we just wanted to have that in place in case there was a drop in the gold price, just knowing we had our debt obligations covered. What's the company's appetite for any acquisitions? At what point could THOR look at raising additional debt? Look, we're currently, we constantly, should I say, look for any value accretive opportunities, and we'll continue to do so. And if debt is required to make these acquisitions, I guess we'll sit down as a board and management and see if it's appropriate to do so. Can you be more specific about what items contribute to accounts payable? Yes. Look, during the upgrade of the plant, we had a significant buildup of gold and circuit, almost over 11,000 ounces. So at today's gold price, about $26 million worth. What we did at the time was have an agreement with our mining contractor to accrue the invoices until the end of the upgrade, and then start making headway into that once that upgrade was done. That's currently being done. That's those accounts payable were held at no interest rate, and that's going to be made. That would also be made current by the end of this year. Yeah, so I think I've been through the questions here.
Perfect, Shagan. Thank you very much for answering those questions. Of course, the company can review all the questions submitted today, and we'll publish those responses on the Investor Meet Company platform. But just before redirecting investors, provide you with their feedback, which I know is particularly important to yourself and the company. Shagan, could I just ask you for a few closing comments?
Yeah, sure. Look, I think I'll close by saying we're very pleased with how the quarter went, and how the remainder of the year is shaping up to be. We're doing this at times of record high gold prices. We're on top of our costs, and we think we're underpinned in terms of value by very strong cash flow now. Now, if we put that to one side, we still think we're a growth company. We think any additional ounces we find are almost classified as super ounces because of the lack of capex required, the fact that we have all the infrastructure in place already, and we believe we will find more ounces in Nigeria and extend the mine life. Secondly, we have a project organically that probably has no value assigned to it in our share price. Once we start having some economics tied to that project in the form of a PFS, I believe people are going to see how much value that can be delivered to our shareholders through there. So we hope from now through to the end of the year, there's a stream of positive news flow from our drilling, from our milestones in terms of the PFS. in both countries as well. And like was in the Q&A section, we also keep our eyes open for anything that may be value accretive to us in terms of an acquisition.
Perfect, Shagan. Thank you once again for updating investors today. Could I please ask investors not to close this session, as you will now be automatically redirected to provide your feedback in order the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Thor Explorations, we'd like to thank you for attending today's presentation, and good afternoon to you all.